This here. Let's do some trading with Alan Nuckman. He's the chief market strategist at bullseyeoption.com. He is, I would characterize him possibly as an optimist, but a realist as well, looking for the bull case in the silver lining, but steering away the last 6 months from outright buying the stock indexes. What are you doing now, Alan?
Right. Again, individual stock play, I'm very optimistic. We've seen a series of higher highs and higher lows in the S&P, and we've been consolidating like Ben talked about. We were in a range for a month from November to mid-December between 3,900 and 4,100. Then we dropped below that. Now that's been the top here recently in a 100-point range in the S&P between that 3,900 and 3,800. So now we're breaking out of that. So I see a lot of positives. The VIX is hanging at 20. The 10-year note's hanging at 3.5%. And so, you know, I see some positives here. And one big positive is China is 50% off its October lows.
Yeah, it's rocking right now, and I knew it. I knew before I even saw the rundown today that you were going to be trading a Chinese stock. I just should have known that it was going to be some kind of random little known one.
Well, we've looked at some of these before. You know, NIO, a lot of these stocks were bad enough to buy. JD.com, you know, a lot of these stocks really got beaten up badly, and that's when you want to be a buyer if you're using my stock substitution strategy where you're buying 3 to 6 months options that are in the money. It's like buying the stock at a discount, and the risk reward was definitely on their side. Now, there's still 40% off the highs in China. There's still a lot more upside in some of these stocks.
All right, so Beak. Tell me about it. How'd you find this? At least that's what I'm calling it, Beak.
I want to get certification to be a chart master. You promote this chart master all the time. Where do I sign up for the class? Because I am a chart master. That's what I look at.
It's a CMT. I don't make the rules, Alan. It's a charter market technician. Take the test, man. You come do the head anytime.
So the chart is very simple. Look at the chart on KE Holdings. It's been trading between 10 and 20 for 10 months. 15 is the midpoint here. So there's some positives here on this stock. This stock is 150% off its lows from October, and it's 75% off its highs from 2021. So this is a stock that moves, a small dollar stock. So that means you can get some good payoff here. So 15 is a super level of support, that midpoint. I'm looking at buying the 15 call for April. It's that simple. It trades for about 4.5. It's about $3 and some in the money. So the expiration break even is $1.25 higher. And so this will give us a good payoff on a modest move on the stock if and when we can break out of that 20 sideways range.
Okay, so in terms of like what they do, who they are, it doesn't matter so much to you, it doesn't sound like.
As long as a stock has adequate volume, so there's good liquidity, you can get in, you can get it out, and especially with these options trade a lot. It's not about the company, it's about the chart. And I'm a firm believer that the chart is a reflection of everything that everybody knows. And I want to get back into some charts with Ben. I know I don't talk to him again until next Thursday when I do the big three. But he's looking at the chart on crude oil, and you can't have it both ways. It can't be that crude oil was too high, it's going to slow the economy, it's terrible, it's inflation, and now that crude oil's down at $70, you can't say that's bad either. But I think crude oil is in position bad enough to buy, like a lot of other products were, a lot of other positions were here recently, and I think it's got bullish risk reward as well.
You're not a believer in the catch-22. I am a believer in the catch-22. I think it can cut both ways. Too high is a problem, too low is a problem.
You can't have it be bad both ways.
All right, well then we can't have Goldilocks either then. Can't be just right.
Well, speaking of Goldilocks, you know, I think the Fed's played this pretty well. You can see we're talking when rates are going to go back down, and if you look at the futures markets, if you go out to 2025, they're hanging around 3.5% in short-term rates. So I think they played this pretty well. You know, the market is aware we're coming to the end of the rate rise cycle, and let's see how the markets react. I think he has to talk tough, but I think the reality is more positive than some of the tough love that they throw out there.
Okay. Always a fun chat. Alan Nuckman, Beak is the ticker. KE Holdings, China-based real estate holding company with online housing brokerage. But the chart is what matters. Just below 18. Does look like if 18 breaks, could be volcanic, could be explosive, a level that's held for a long time. All right.
We'll
Appreciate
see, and we're positioned with the limited risk option to be there. We call that position for success.
Positioned for Success, featuring Alan Nuckman, aspiring chart master and chief market strategist at bullseyeoption.com. Thanks, Alan. Down at the CBOE, he's back in Chicago. All right, Michael Purvis on deck. We've got some charts. We've got some trades. Don't miss it. Equities running here.